Hello and good morning, ladies and gentlemen. You're with Martin Panev, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook. Starting with last Friday, North American markets. Of course, the U.S. non-farm payrolls report, the NFP, which missed its headline expectations of 225,000 with 215,000 readings. Surprisingly, foreign exchange traders who were probably ready with their buy triggers dragged the dollar higher across the board anyway. A second look at the report inspired a sharp U-turn, though, among the majors. For one thing, a miss in the NFP report does not bode well for the Fed, which recently noted that it's looking at a labor market improvement for the timing of its next interest rate hike. Luckily, the greenback didn't take too many hits. Possible explanations include June's numbers being revised higher, the unemployment rate remaining at 5.3%, and the average hourly earnings exceeding market expectations with a 0.2% growth against last month's stagnation. The labor market conditions report is due today, as well as a couple of speeches from Fed's members, Fishers and Mr. Lockhart. On Friday, the main indexes, the Dow did a 180 point range, and the Nasdaq moved with another 60. However, both markets closed near the open in a few points to the negative, to the downside. Moving to the European markets, the French CAC 40 has decreased with 40 points on Friday, and the pressure remains to the downside in the short run. Basically, the correction to the uptrend is visible on a daily chart, so you can go ahead and take a look. A few days straight up movements there. Currently, the index is at 7 years high. The German DAX 30 did 100 points move on Friday and is at 3-day losing streak. The euro dollar is on a positive trend since the negative NFP reports and moved with another 15 points on Friday and is keeping the positive trend as of the current moment as we speak right now. This week, the news in the economic calendar are to show a clear picture on the inflation in the European Union and its major economies, along with retail sales reports, industrial production, and gross domestic product, which will come by the week's end. Moving to the British front, the UK markets, starting with the FTSE 100, which moved down to a total of 11 points and closed at 6,690. The 10-year gilt yields were at 1.85, which is almost 4%. Good trade balance, actual 9 billion, expected 9.2, previous was 8.4. Total trade balance for June, the actual was 1.600 billion, previous was 0.8, almost 900. Britain's exports are the strongest performance in 9 years, despite the recent rise of the sterling against the major rivals. The exports of the UK increased by 6.6%. This didn't help the sterling, as it either moved sideways or lost value against the other majors. The pound versus the Pacific currencies were the biggest movers last Friday. In numbers, the pound Aussie moved 24 points down on Friday, 25-point range. Sideways is the move today, and versus the Kiwi moved 31 points down on Friday, 40-point range. It is again moving sideways today. BRC retail sales monitor all year on year for July, and this is for today. Asian Pacific markets, Chinese exports came worse than previous and 0.1% worse than expected. Also, imports came worse than previous, 6.7% worse than expected. Trade balance overall worse than previous and $10 billion worse than the expectations. These were all Saturday news. On Sunday, we had the Consumer Price Index during the night, month on month, as expected, 0.3%. Consumer Price Index year on year, 0.1% better than the expectations. And the Producer Price Index year on year, which came out 0.4% worse than expected. Basically, Asian stocks fell after the China reported the bigger than expected slides in the exports and producer prices, and the US job data boosted trader expectations for Federal Reserve interest rate increase next month. Japanese stocks swung between gains and losses as investors weighted positive earnings results with weaker than expected Chinese economic data. The Nikkei 225, the 200 points range, ended with 18 points up on Friday. Opened today with a bullish gap of 50 points, even a little bit more than 50. 110 points up already. We are going to see the money supply readings today. On Wednesday, we have the Chinese retail sales year-on-year and industrial production year-on-year reports. On the Pacific front, on Friday, the Aussie has staged somewhat of a comeback versus the greenback post the NFP report. The Aussie came with a positive RBA statement overnight with an upgrade of inflation expectations to 2.5%, which is over the next 2 years, while the unemployment forecast was also lowered. This, with a future reading of a positive jobs report last week, is supporting a future demand for the currency, despite a long bearish phase. Today, the currencies of Australia and New Zealand retreated after a disappointing trade data in China, deepened concern that the demand for the commodities will weaken in their key exports market. The Australian dollar had the steepest decline among major currencies against the greenback after reports in China over the weekend showed that the export shrank 5 times more than the economics estimated, and producer prices fell by the most in almost 6 years. The Aussie and the Kiwi had dropped last month as commodities plunged and bets increased that the Federal Reserve will raise the US interest rates, which is due to come probably next month. On the commodity sector, starting with the S&P 500 index, which had a range of about 20 points, closed at 2,080. This is pretty much the price currently. Gold had a range of $70, trading at 1,100, pretty much close to. Silver had a range of 40 cents at 14.90 now. The WTI had $1.50 range at 43.60 now. For Norway, oil at $50 is worse than the global financial crisis. The country is heavily relied on oil, and with the current unemployment rate, there will be some very, very big difficulties there. Currently, the price is the lowest in 3 months span. Wednesday, we're looking at crude oil stock exchange. Thursday, natural gas storage exchange. That was all from me for today. Thank you very much for your attention. I wish you a successful trading day. Cheers. Bye.